30, 60, or 90 days, this live is for you. And if you're coming up under the sound of the replay, you're going to want to save this, because I am going to give you 3 actionable steps you can take this weekend that will move the needle and help you cross over to the funding side. Not motivation, not theory, real actionable steps. So walk with me. Okay, so what I'm going to do is go over what will take you exactly where you need to go. So if you stay until the end, you'll know exactly what lenders are looking for first, what silently disqualifies people, and how to position yourself to look credible and fundable in the right way, right? It sounds good. And if this does sound good, I do have a 30-day free boot camp for you. If this is the replay for you, just DM me the word boot camp, or you can just follow the link in my bio, either way. Or if you have any questions, definitely DM me. I'm always happy to help, okay? So let me be clear. Funding is not luck. It is strategy, guys. It is about presentation, positioning, credibility. Credibility means truthful and believable. Banks do not guess. They mitigate risk. It's just as simple as that. All right, don't take anything personally if you're denied. It's strategy, and they mitigate risk. Do you look risky? Do you look credible? That's it. That's all it boils down to, okay? Do you have a relationship with the institution you're asking for money from? That's our biggest mistake. We always just go to some random bank that doesn't know us and wonder why we got denied. All right, underwriters verify the information. That's it. Okay, so everything we talk about today is about making it easy for you, for a lender to say yes to you. Okay, so I wrote it down because I want you to take these actionable steps this weekend. Okay, so step 1, you want to clean and optimize your personal credit profile. This is the foundation. Pull your credit report this weekend. You can go to myfreeannualcreditreport.com, whatever, or if you need to get all 3 for $1, just follow the link or DM me or anything. It's a million ways to get your credit report. So even if you want EIN funding only, funding later, personal credit is still one step that will get you approved, okay? So number 1, part A, I want you to pull your full credit report and clean any personal information that's on there. Your personal information is that first section that has your name, your employer, and your address. Okay, do you notice how it'll have various spellings of your name? Get rid of all of that. You'll have 1,001 addresses. Get rid of that. You'll have all the employers you've ever worked for in your life. Get rid of that. You should have one name, one address, one employer. Okay, so pull your full credit report, guys, that has the score attached. Review the personal information section just like I just directed you, and get rid of all misspelled name, all addresses you never lived at, old employees, incorrect employers. You also be having like a bunch of stuff that's not even real or accurate. Get that off. You look crazy. You look unstable. Just get it off. Okay, trust me. All right, here's why this matters as well. Those old addresses and employers are often tied to old negative accounts. So lenders and creditors use them to verify that account, and they actually tie negative accounts to, or any account you open, to the address that's linked to your personal information, and they create a serial number, just so you'll know. So they use it to verify collections, charge-offs, and late payments. All right, so if the information is wrong or outdated, it can be used to re-verify negative items when you're trying to get this stuff taken off. It makes your file look sloppy, okay, and it lowers your credibility. You just don't look credible. So clean the personal data, and that will equal cleaner disputes and a stronger, powerful profile, okay? If the file looks messy, lenders assume your finances are messy too, okay? You need to put yourself in the shoes of the underwriter. They're looking at accounts and applications all day. And whether you are aware of it or not, you are being judged. You're judged the way you look. You're judged the way you talk. You're judged the way you look on paper, okay? If I'm someone that is used to looking at professionals and corporations ask for money all the time, I could readily identify someone that's not matching the rest of the people I'm used to seeing. So something in me would be like, This person got like 18 different addresses. Are they stable? Like, what's going on? Let me look into what's really going on and what they placed on the application. So be mindful of that. Everything matters. Okay, everything matters when you're going for funding. You need to look presentable, clean yourself up. And what I'm telling you, just to recap everything, I'm giving you 3 actionable steps you can take this weekend that will get you closer to the funding side. Okay, part B, you want to reduce credit card utilization. You want to reduce it below 10%. Like, check your credit card balances, okay? People are confused. I do monthly workshops, and I just did one the other day, and people always ask, how do you know if your credit card utilization is 30% or not? It's simple math, guys. I know all of us are adults, and we haven't did like simple math, like converting times, multiplication to, percentages and vice versa, okay? So to get a percentage of anything, you have to divide, all right? So your credit card utilization is your credit card balance divided by your credit limit. Example, if your credit card limit is $1,000 and the balance on it is $300, divide 300 by the 1,000 and it will spit out 30, which is 30%. 30%, anything that's 30% or lower will not harm you, but it will not help you either. There's a pointing system, okay? So credit card utilization, you can gain or lose up to 175 points. So we want to get as much of those 175 points as possible. So lowering it below 10% will add points to your credit report. I hope that makes sense, okay? Now, check your credit cards and your credit card balance. Again, if your credit utilization is above 30%, you are already hurting yourself. You're losing those 175 points. That's why when people correct thank you for the heart. If this is information you can use, guys, just put me a little love and tap and share and push this live, because I'm giving you information you can take today. This isn't theory. This isn't tied to me trying to sell you anything. I genuinely want you to take action, okay? So 30% and above will harm you. So you're already hurting yourself. If it's above 50%, you already lost 75 to 100 points. So as soon as you pay it down below 10%, you can gain those points back, okay? You are looking and blocking approvals. Another thing, if you have high credit card utilization, don't even think about applying for funding. You will automatically be denied. Again, your goal is 10% utilization, below 10%, okay? Why? Because utilization alone can impact your score up to 175 points. I just mentioned that. That means paying balances down, making multiple payments per month if needed, even spreading balances across credit cards, guys. Be mindful and use all your credit cards. I'm guilty of it too. I have one or two, I got a ton of credit cards, but I only have 2 of them that I favor. Don't ask me why. Well, I'll tell you why. One is connected to my wallet and it gives me good points. So I'm always tapping. And I neglect the others. So spread the love across all your credit cards to keep it below the 10%. This is one of the fastest score increases available. That's when you see people go from 500 to 700 or 500 to 620, like real easy, just from that credit card utilization, all right? Part C, you want to remove late payments and charge-offs, all right? Late payments and charge-offs can suppress your score up to 225 points. I bet you didn't know that. A lot of people feel like, oh, I only have one late payment. That one late payment is costing you 100 points or more, depending on how recent it is. Late payments can cause you to lose up to 225 points. Late payments and high credit card utilization has the most detrimental impact negatively on your credit report. All right? 35% of your credit score is made up by late payments or not having them, and 30% by high credit card utilization. So many late payments and charge-offs are inaccurately reported. So make sure you pull your credit reports and make sure this is right. Missing and required data, which will give you the right to dispute it. Past the reporting window and not legally verified, okay? This is where strategy matters. And you need to understand the Fair Credit Reporting Act. All right, I teach this step by step, and I also have an instructional guide called the AI Credit Repair Secrets. If you have any negative items, we have a GPT tool that is already programmed with case law and FCRA. You can just upload your personal credit report and it will spit out customized letters that will get this stuff removed. I myself removed my own bankruptcy with some of the same laws, okay? I'm telling you, it's possible. Audit your reports is highly important. All right, identify weak accounts. I want you to use that tool. It's either, it may be in I know it was my Black Friday sale. It should be in my bio. If not, just DM me and I'll send you the link. Anyone who said like I was on the live, instead of charging you the $500, I'll send you that very same link for my Black Friday sale. Only if you said you saw it on my live, okay? All right, identify any weak accounts, generate complaint dispute letters by using that GPT that is going to be included in that $97 bundle. All right, and just remove these items right away. And here's something I want you to know. A lot of us may feel like, oh, I don't want to listen to that. I did credit repair before. Just like me, when I was disputing my negative items, we think that because we have the tools and the information and the laws that immediately they should take it off. As soon as we give them all the evidence, they should take it off. No, there's a game that they play. So be prepared to go back and forth with them for 2 to 3 months. Eventually, once they're backed into a corner and they see that you're serious and you know what you're talking about, because you're going to know what you're talking about, because you're going to take the replies and upload that to the GPT-2, and it's going to spit out a new reply. And you're just going to keep going toe to toe with them using case law and consumer law. Not no 609 letter. And this is something customized to your situation. So be prepared for the stall tactics. Be prepared for them to come up with reasons why and verifying the debt and all this and that. And you just keep going back and forth. Do not give up. You have consumer rights to get any and everything removed off your credit report. All right. So if you want funding, this step is not optional. We have to reduce the credit card utilization. And I wasn't even going to mention this, but I'll plug you right now. If you're struggling with high credit card utilization and you're just like, hey, I just don't have it right now, you can do a soft pull with BHG Financial and SoFi Financial to see if they'll cover that. Okay, I've had a few people where you can't have a bunch of late payments and high credit card utilization. Like that has to be your only thing that's going on. I'm just going to keep it real, but it's nothing stopping you from just seeing if they will pay down the debt for you. It's a soft pull. That's my gift to you on this Funding Friday, okay? I hope that was information you can use. All right, so if this is information you can use, guys, share this live, give me some hearts, tap on the screen. All right, now let's move to step 2. All of that, I know it was loaded, that was step 1. Step 2, check if your business is on the risky lenders list. Highly important. I'm starting to believe it's more than, I used to think like, okay, maybe 30-40% of the people are being denied due to this. Lately, it's been mad crazy. Like almost everyone I'm running into, hopping into the mentorship or coming up under my tutelage for funding to buy a business, they have businesses with risky names, all right? So this one surprises people a lot, right? You can even, I had someone in my workshop, he has like a lab or something like that, medical lab and testing and DNA testing and all of that. He was like, man, that was good information you gave them about the risky lenders list, right? And I have workshops like almost monthly. I have a new one coming up. So DM me if you're in the Atlanta area. I'm telling you, they are fire. And he said, you're right. He said, I had my company under the healthcare industry. He said, I switched that SIC code to tech. And he said, it unlocked multiple six figures of funding for him, where before he was denied. So you have to understand what you're doing, and just don't categorize and just guess, okay? You need to search risky business codes, risky business credit, SIC codes. Huge lists that are out there. See if your company is on there. Evaluate your company. See if it's another category you can give it that does not land you on that list. Read, describe, and give a new description to your company. All right? Make sure you have a good credit score, money in the bank, and a registered business. Okay? And if you still get denied, why? It's more than likely your industry code. Your industry is flagged as high risk, okay? This weekend, I want you to Google business credit risky SIC codes. Like I said, look up your business activity and classification. All right, some industries are considered risky due to high charge-offs, fraud rates, okay, regulation, and volatility. You know, you have credit repair, financial services, you have trucking, you have real estate. I almost was homeless dealing with real estate. Real estate is risky, okay? And consulting niches, you got to know which one to get in. That's correct. Consulting niches are landing themselves on this list. Credit repair services, some online services, cash heavy businesses like strip clubs and nightclubs and stuff like that. This does not mean your business is bad. It just means that the presentation must be strategic. Okay. Sometimes your SIC codes needs adjusting. Like I just mentioned, your business description needs refining. Your primary activity needs repositioning. This step alone has saved clients from automatic denials. I was able to get people who have come into my mentorship turn their denials into approvals. Okay. Step number 3, we're finally here. All right. Check and fix business credibility. So this is where most people lose funding without even knowing it. Lenders cross-check everything. Anything you place on that credit card application needs to be verified, and it needs to show up everywhere. So this weekend, verify that your business information exactly across the board, okay? At the Secretary of State, IRS, at Duns and Bradstreet, your business banking account, your website, your email, your phone number, your address. Just Google your business, Google your name, make sure everywhere that it's showing up, it's all congruent, meaning that it matched, okay? Check business name spelling, address formats, suite numbers, owner's information, business description, all right? If one source says LLC, another saying nothing, another has an old address or your home address, you need to update all this information. To an underwriter, mismatched data equals risk, fraud, and denial, period. They will deny you saying this business is not verifiable. I've had that happen. Your business should look boring, consistent, and professional. Consistency equals credibility. What does credibility mean? Truthful and believable, okay? Credibility equals funding. All right, so let's recap everything. This weekend, do these 3 things. Number 1, pour your credit report, clean your personal information, reduce your credit utilization below 10%, and address any late payments and charge-offs. Link in the bio for the AI credit repair secrets, right? Check whether your business is on the risky lenders list and adjust positioning it if needed. Step number 3, make sure your business records match perfectly across the board. IRS, Duns and Bradstreet, websites, everywhere, okay? If you do these 3 things, you are already ahead of 90% of the people who just randomly just go for funding and applying for funding. If you want help doing these steps, you know, like the link is in my bio, DM me. If you're coming up under the sound of the replay, you need to save this information and share it out to an entrepreneur friend. So I also have a gift for you as well. I have a 30-day mentorship, totally free, no credit card, no gimmicks. Just DM me the word bootcamp or check the links in my bio. I have a bunch of free resources in there. Why? Because I am you. I am ready for you to get funded in 2026. Take these 3 actionable steps and you're 90% there. Happy Funding Friday. Be amazing. Be great. Let's take action. Let's get funded. Bye, guys.